I really want to keep educating our viewers on what are alternative investments, all the different types of them.
Yep.
Can you touch on that a little bit?
Sure. Yeah. So alternative is kind of a catch-all phrase that is used in the industry. So it's an alternative investment that is different from just the typical stock and bond allocation. Mm-hmm. And in that net, that wide net, you have non-traded REITs. Mm-hmm. versus the publicly traded REITs, and there's pros and cons for both in someone's portfolio.
And so publicly traded would mean a ticker on the stock exchange.
On the stock
you can
exchange,
go in and buy it, sell it.
And it's almost like owning a stock itself.
Mm-hmm.
That price goes up and down, and you can sell it just like you own a stock. You own a share of that stock that basically owns a percentage of real estate, also some debt, and mm-hmm. owns some cash just for that liquidity that they have as well. The benefit of a private non-traded REIT is that you don't have that liquidity. You do have some quarterly liquidity. They call that the share repurchase program, and mm-hmm. you're limited on how much you can actually get out if there was a run on the bank.
Well, and I really want to get into that. We'll do that later in the show, the idea of risk, because that directly goes to risk.
Yep.
Illiquidity. It's an illiquid investment.
Right.
So.
But the main thing is, on a publicly traded REIT, the yields are a little bit less than on a private non-traded REIT. Those yields usually are a little bit higher.
Okay.
And really, people are looking. Well, because you don't have that fluctuation of the market. Okay. You don't have that fluctuation of the liquidity happening on a daily basis. Because on a non-traded REIT, you own a hard asset. You own some real estate.
Right.
And so if it's really hard in the sense if you own, let's say, 3 multifamily complexes mm-hmm. in your portfolio, and all of a sudden you have someone knocking on your door to say, I need to liquidate my investment. It's hard to sell that property right. just in day one. So you have some other investments in there mm-hmm. that can provide that type of quarterly liquidity that the portfolio needs.
I almost wish they would break out define it as investment risk and liquidity risk.
Correct.
Because that really would be, I think, more helpful to investors deciding where they want to place their money.
Correct. Yeah, and within the stock market, emotions run with mm-hmm. the investors.
Oh yeah.
And a lot of people do knee-jerk reactions and get out at the wrong time, and
yeah.
and you don't see that in the non-traded or private area
Sure.
in the alternative space as much. Because you just can't hit a switch and liquidate your entire portfolio.
Well, I know with alternative investments, we believe that every investor should be thinking in terms of having a stock market allocation, an alternatives allocation, and a principal protected allocation. And that way, that's how we rebalance across what we call the asset stack. With alternatives, there's 4 things that we're looking for. We want to have income, we want tax efficiency, we want that low correlation to the stock market. So when everybody's hair is on fire and they're just dumping stocks and selling at the worst time, that's not part of the alternative investments. And of course, the 4th thing is we want growth. Mm-hmm. So we get all of those, or historically a potential for all of those with the alternative investments.
Yeah, absolutely.